This is the real estate market report for Lake Arrowhead Woods in 2022. This is the month of December. So the average sales price right now for a home in Lake Arrowhead Woods is at $827,000, and that's actually up from last month of November, where it was at $763,000. So a considerable increase. That's about an 8% increase. Home values have actually plateaued over the past few months and have started a downward trend that started basically in last month. So we're headed towards more of a buyer's market. The market is favoring buyers right now, but the majority of homes are selling just below asking price, and some homes, which is interesting, are still selling for top dollar and going over asking. So it's a very mixed market. Right now, this is very important. The U.S. inflation has actually been in a downtrend for about 6 months now. So this year in June, inflation peaked at 9.1%, and it's fallen over the past few months and is now at 7.5%. So that's obviously a considerable improvement. And the U.S. obviously started printing money to combat inflation, or to make the market inflate more from the pandemic and prop it up. So, from the start of the pandemic, inflation has actually gone up 513% in just 2 years. So it's good. It's a good indicator that now it's finally coming down to more of a, it's headed towards a recovery. So those are good positive indicators. Right now, your average 30-year fixed rate mortgage is about 6.8%, and that's the average from November. The Federal Reserve obviously, uses the interest rates to combat inflation, and we're seeing that working. So last month's was just a little bit higher at 6.9. So you can see as it's gone up in the past 8 months or so, it's kind of plateaued over the past few months, and then it's going to be decreasing in the near future, hopefully. So the average days on market right now is 49 days. That's definitely up since last month. So that just means that homes are taking longer to sell. This is basically because there's fewer buyers on the market right now, and it's going to take them a longer period of time to get showings and get an offer in and then get it accepted. Price adjustments haven't really gone up since last month. We're at about 55 price adjustments. So that's whether it's up or down, mostly down right now, obviously. And those are actually really low numbers compared to our normal market, pre-COVID and things like that. So the inventory also hasn't gone up, and that's a good indicator for the strength of our market. If inventory really increased a lot, we would see more downward pressure on the home values because there would be more supply. But over the past few months, we've had about 160 to 190 listings kind of come and go in Lake Arrowhead Woods. And so with more of the sellers sitting on the sideline waiting to see how the market's doing, we really haven't seen that buildup of listings on the market right now. And so that's a good factor of keeping the home values strong, because there's less options out there for buyers to pick from. So right now, you guys really need to understand what's kind of going on at current events. So right now, obviously, there's a pending recession in the news. Everybody's kind of curious about how that's going to play out, or what industries are going to get affected. Today, I looked into really job layoffs, and so a handful, if not dozens of major U.S. firms in the tech sector have been laying off employees at an increasing pace over the past few months. And there's a couple reasons why they're doing this. And the first is that when the pandemic came, the world rapidly moved online, of course. And so that surge of e-commerce led these tech companies to be able to grow at a record, an extraordinary pace. So now that the demand is cooling down and people are kind of returning to their not online life as much, these companies are losing a lot of demand and a lot of business. And so what that's doing is that, they're needing to tighten the belt, take off some of the employees that were helping with the growth, slow down the company so that way they can meet this new demand. Some of the other sectors that is affecting right now are actually in the real estate industry. And this is probably because of the interest rates and just everything going on with it. But Zillow, Redfin, Opendoor, BetterZoom, Compass, Vacasa, Realtor.com, Finance of America, and Keller Mortgage JP Morgan and Rocket Mortgage have all announced and have been doing layoffs. So that's obviously a negative indicator of our economy. But what's good is that this isn't a widespread amount of layoffs over every single company like in 2008. With the U.S. unemployment rate actually at close to the lowest level in the past 50 years, overall, our job market's actually really strong. So this workforce is really, bulletproof. We have more people working right now in the U.S. than has ever worked in the history of time. And so it's really just to change, they need to get rid of some jobs to match where we're at now. The market's fine. Job market's fine. So the other factor, and these are recent numbers, the quarter U.S. GDP numbers came out last month in November. And so despite conflicting messages from the media, the United States is actually doing really well. So we actually increased about 2.9%. We were at $25.2 trillion, and we increased about, $500 billion last quarter. So we're at $2.57 trillion of GDP. So our economy is still growing regardless of, what everybody else is saying. And what's also interesting is, if you remember last market report, we were concerned about China. China's economy actually is doing a little bit better right now. They're in second place, obviously. They're the second largest producer in the world, and they're at 17.7 trillion. And so they've actually had some recovery in this quarter too. So there's a lot of speculation going on about this pending recession and things, but I'm overall optimistic about the economy and the strength of it. And I really think if there is a correction, which we're seeing right now in the stock market and some other things like that, it's going to be a lot more minor. It's not going to be a full-fledged recession. So realistically, you need 2 quarters in a row of the market declining to call a recession. And we haven't hit that yet, so it's not official. So minor correction probably ahead of us. But there's a lot of things that are kind of putting pressure on the real estate market up here right now. Obviously, as the market becomes more favorable to buyers, the buyer demand is shrinking, and it's probably likely going to keep going until the rates come back down. A lot of people are coming into the mountain with cash, 1031 exchanges. There's a number of investors taking advantage of today's market. So there's a lot of opportunities for those types of people. Since the inflation is in a downtrend, I think over the next few months, we're actually going to drop the interest rates more. We've seen it plateau. I'm hoping it's going to come back down. There's no real reason to keep the rates as high as they are if we are fixing the problem, right? So over the next couple years, I think the real estate market's going to come all back, and it's going to be even stronger than ever. So a lot of optimistic things there. I think today, if in this market, the opportunity is really to buy low, to preserve capital, and also hedge against any other industries that you're in. So thank you for watching. My name is Jonathan Vieira with Team Lake Arrowhead. This is the monthly market report. I do these every single month. I put them out on YouTube. You can get on my email list, and as well as I put them on social media. So if you guys like what I had to say, if you have any questions, definitely reach out to me directly. I'm happy to answer any questions, as I really like to talk about this stuff. So see you next month.